Imagine a company offering you 160 million shares of their stock for just one single penny each. 1 cent.
Right. Which at first glance, I mean, it sounds like a catastrophic typo on a legal document.
Exactly. But that is exactly what Advanced Micro Devices just offered OpenAI. It's not a mistake. It might actually be the smartest, most aggressive strategic moat ever built in the history of the AI hardware war.
Yeah, it fundamentally changes the relationship between a hardware manufacturer and a software developer. Like when you look at the mechanics of that deal, they are effectively weaponizing their own equity to lock down the future of artificial intelligence infrastructure.
Welcome to this time and market deep dive. Before we jump in, just a mandatory disclaimer for you right at the top. This deep dive is strictly for entertainment purposes. We are here to analyze the data, but you should always seek professional financial advice before making any investment decisions.
For sure. We're looking at the landscape, not managing your portfolio. The semiconductor market is moving at a velocity we honestly haven't seen in decades.
Yeah, and examining these trends requires separating the actual cash flow from all market hype. Which brings us to our mission today. We are taking a massive stack of recent sources, including AMD's 2025 10K filing, their blazing hot Q1 2026 earnings report, and fresh analyst forecasts.
There is a lot to unpack there.
There really is. We're going to unpack the mechanics behind one of the most talked about tech runs of the year. We'll look at AMD's explosive recent performance, the massive gigawatt-level infrastructure deals they are quietly signing, and, well, a surprising plot twist.
Right, the agentic AI shift. That's a huge piece of this.
Exactly. How agentic AI is making older technology relevant again. But let's start with the sheer velocity of their current financial performance, because the numbers coming out of Q1 2026 have truly stunned Wall Street.
Well, the context for that Q1 performance really starts with the foundation they built in 2025. Last year, AMD pulled in $34.6 billion in total net revenue.
Wow, just a massive floor to build on.
Right. That was a 34% increase from 2024. And the growth wasn't isolated. The data center segment grew by 32%, reaching $16.6 billion. And the client segment, which is, desktop and mobile processors, jumped 51%.
So they built this massive revenue floor. And then Q1 2026 hit, and the acceleration curves steepened dramatically. The Q1 numbers are just staggering. We're looking at $10.25 billion in revenue for just one single quarter.
Yeah, which is up 38% year over year. It's incredible.
It really is. And adjusted earnings per share came in at $1.37. Both of those numbers easily cleared analyst expectations. And naturally, the market's reaction has been historic.
Oh, absolutely.
Yeah.
Heading into this earnings print, the stock had already surged roughly 66% year to date.
Right, trading in that $324 to $377 range. Zooming out, that represents a jaw-dropping 242% increase year over year. That pushes their market cap to around $557 billion.
And on top of that, they just announced a new $6 billion share repurchase program.
Which brings their total buyback war chest to, what, $10 billion?
Exactly. And allocating $6 billion to buy back stock after a 240% run-up, that sends a very specific signal to institutional investors.
Because usually management teams only execute buybacks when they believe their stock is undervalued, right?
Exactly right. Doing it at all-time highs implies they see the current valuation not as a peak, but as a new baseline, one that's fueled by the underlying cash generation of the business.
But wait, a 240% run-up in 12 months? That screams .com bubble to me. We've seen this movie before where tech companies trade purely on eyeballs, future promises, and just having the word AI in their press releases.
Yeah, the vaporware valuation trap.
Right. So why isn't this just another one of those? Like with an operating margin jumping to 25% and $2.5 billion in Q1 operating income, is AMD actually proving that this hype has translated into hard, sustainable cash flow?
The differentiator here is operating leverage. During the dot-com era, revenue growth was often accompanied by massive proportional cash burns.
Right, burning cash just to acquire users.
Exactly. But AMD generated $2.56 billion in free cash flow in Q1. Operating leverage means that as their revenue scales up, their fixed costs like research and development or overhead, they aren't rising at the same rate.
So a significantly larger percentage of every new dollar earned falls straight to the bottom line. It's just actual cash in the bank.
Precisely. And to understand why that cash is piling up so fast, you have to look at the primary engine driving the whole machine,
The data center segment, because, this isn't about selling processors for gaming PCs anymore. The data center segment pulled in $5.8 billion in Q1 alone.
which is a 57% year-over-year increase. It's massive.
It's wild, and the sources point to these hyperscaler deals as the catalyst. We are talking about commitments from Meta and OpenAI to deploy up to 6 gigawatts of AMD GPUs. I actually want to pause on that metric. We aren't measuring chip sales in units anymore. We're using gigawatts.
Yeah, measuring data center capacity in gigawatts reflects the physical reality of modern AI infrastructure. Hyperscalers, so companies like Meta, Microsoft, Google, they don't buy individual chips.
They build those sprawling warehouse-sized data centers.
Exactly. And the limiting factor for these facilities is no longer just how many chips they can physically fit inside the building. It's how much power they can draw from the local electrical grid to run and cool all those chips.
Wow. So securing 6 gigawatts of power capacity specifically for AMD hardware means these companies are dedicating entire regional power grids to AMD's tech.
Yeah, for the next several years.
Yeah.
Which brings us back to that massive hook we started with, the strategy for locking in these hyperscalers, particularly OpenAI.
Right, the warrant deal. According to the sources, AMD gave OpenAI a warrant to purchase up to 160 million shares of AMD stock at an exercise price of 1 single cent per share.
1 penny.
Break down the financial mechanics of this for us, because on the surface, practically giving away millions of shares of a $300 stock sounds completely insane.
Well, a warrant is essentially a contract that gives the holder the right to purchase stock at a fixed price, the strike price, sometime in the future. Usually that strike price is near the current market value.
So setting the strike price at 1 cent means the shares are virtually free.
Right. However, this isn't a gift. It is a highly engineered performance contract. Those 160 million shares only vest, meaning OpenAI only actually gets them if OpenAI hits specific aggressive milestones for purchasing AMD's Instinct GPUs.
Oh, wow. So it's a multi-billion-dollar carrot dangling in front of OpenAI. If they buy enough hardware to train their next models, they get massive equity in the company building the hardware.
It perfectly aligns their financial incentives. If OpenAI purchases the required volume of GPUs, AMD's revenue spikes, which theoretically drives up AMD's stock price.
And then OpenAI exercises their 1 cent warrants, instantly capturing all of that upside as pure profit.
Exactly. Furthermore, it creates an enormous switching cost. If OpenAI decides to take their business to a competitor like NVIDIA, they don't just have to redesign their software.
They forfeit billions of dollars in AMD equity. It is literally a structural moat built out of stock.
It's brilliant. But securing the deal and supplying the chips, it's really only half the battle. You have to look at the ZT Systems acquisition to see the rest of the strategy.
Yeah, let's talk about that, because looking at that deal, it feels less like a traditional corporate merger and more like, I don't know, buying an entire famous restaurant just to poach their head chef and then immediately selling the physical building to someone else.
That is a remarkably accurate analogy, actually. AMD bought ZT Systems for $3.2 billion in cash and stock, kept the design talent, and then immediately flipped the manufacturing side of the business to Sanmina for $2.4 billion.
Why go through all that complex financial maneuvering, though?
Because deploying AI at a gigawatt scale requires incredibly complex rack-scale engineering. You can't just hand Meta or OpenAI a pallet of GPUs.
They run so hot, right?
Exactly. They run incredibly hot and require intricate liquid cooling systems, specialized networking topologies, and highly specific power delivery architectures at the server rack level.
So ZT Systems held the intellectual property and the engineering talent, the head chefs, to design those integrated systems. But AMD didn't want the actual factory that builds them.
Right, because bending metal and assembling physical server racks is a notoriously low-margin, capital-intensive business. And AMD is a high-margin semiconductor designer.
Ah, so absorbing a low-margin manufacturing plant would drag down that 25% operating margin we talked about earlier.
Precisely. By selling the physical manufacturing operations to Sanmina, who is a dedicated contract manufacturer, AMD retains the valuable design capabilities required to sell end-to-end AI systems, all without diluting their financial profile.
That makes a lot of sense. And the reason AMD needs those ZT Systems engineers to build these massive server racks isn't just because the GPUs run hot. It's because the fundamental nature of the software they are running is shifting.
Yeah, the software evolution is driving hardware changes.
Right, because for the last 2 years, the entire narrative has been GPU, 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 but the sources point to a massive plot twist. CEO Lisa Su expects 60% annual data center growth over the next 3 to 5 years.
And she explicitly noted that the server CPU market is expected to grow by strong double digits in 2026.
Yeah. Why is the central processing unit, the CPU, suddenly making a comeback in an AI world?
The mechanism driving that resurgence is the evolution from standard chatbots to what the industry calls agentic AI. Up until now, the dominant consumer AI experience has just been a conversational chatbot.
You input a prompt, and the AI uses a GPU to rapidly calculate the most probable text response, right?
Right. It's a discrete, single-turn interaction heavily reliant on the parallel processing power of a GPU. But agentic AI is different.
It doesn't just answer a question, it operates in an autonomous loop and uses digital tools to accomplish complex tasks, like the weather app example from the sources.
Yeah, that's a great example to illustrate this.
Let's say you tell an AI agent, build me a daily weather infographic for Chicago. The AI first has to reach out to the internet and fetch live data from a weather services API.
Right.
Then, it has to run a Python script to convert that raw data into a readable format. And finally, it generates the visual graphic.
The distinction in hardware requirements is crucial there. The AI's reasoning engine, the part that decides what steps to take and in what order runs on the GPU.
But the actual execution of those specific tools, making the API network call, running the Python script, managing the file system that happens on the CPU.
Exactly. CPUs are designed for complex sequential logic and system management, tasks where GPUs are historically pretty inefficient.
So if the GPU is the master architect reasoning out the blueprint and making the decisions, the CPU is the general contractor actually swinging the hammers, making the phone calls, and coordinating the supplies.
I love that analogy. You literally cannot build a house without both. As AI models become autonomous agents doing background work, the demand for the hardware swinging the hammers is skyrocketing.
Which creates a unique dual-threat advantage for AMD in the data center. Because when you look at the competition, NVIDIA dominates the AI GPU market, but they don't have a strong presence in the x86 server CPU architecture.
Right. And conversely, Intel has historically dominated the server CPU market, but they are currently losing market share to AMD's EPYC processors. And Intel lacks a top-tier AI GPU to compete at the highest end.
So AMD stands alone at the intersection, offering integrated platforms containing both the reasoning hardware and the execution hardware. It sounds like a flawless victory.
It does on paper, but we have to look at the physical reality of building these chips, which carries immense risk.
Yeah, let's do a reality check for the listener here. Because the higher the stock price, the less room there is for error. One of the major red flags in the sources is their inventory levels.
The key metric here is Days Inventory Outstanding, or DIO.
Right, which measures how long it takes a company to turn its physical inventory into recognized sales. Currently, AMD's DIO sits at 160 days. That is nearly 5.5 months of chips sitting on shelves.
Which is 23 days above their 5-year average.
Why is that specific metric so dangerous in the semiconductor industry?
Because semiconductors are highly capital intensive. A company must invest billions of dollars to manufacture a wafer of chips months before they see a return.
I mean, in an environment where demand vastly outstrips supply, holding inventory provides pricing power, right?
It does, but technology depreciates rapidly. If hyperscalers like Microsoft or Meta decide they've built enough infrastructure for the current generation and they temporarily pause their capital expenditures, that inventory becomes a massive liability.
Oh, I see. It ties up billions in cash and loses value every single month as next-generation architectures are developed.
Exactly. And adding to that risk is the geopolitical reality of the global supply chain, specifically the U.S. export restrictions to China under Section 232.
Yeah, the sources mentioned that in 2025, AMD had to take a massive $800 million inventory charge on their MI308 chips because new U.S. export restrictions suddenly made them illegal to sell to certain Chinese markets.
Right. They eventually secured licenses to reverse about $360 million of that charge. But the ongoing financial impact is severe. During the Q1 2026 call, CEO Lisa Su confirmed that China-facing sales are currently capped at around $100 million for the quarter.
So setting aside the complex politics of international trade, the purely financial mechanism at play is the sudden removal of a massive portion of their total addressable market.
Yeah, operating leverage works in both directions. When you build an operating model assuming global demand, capping sales into one of the world's largest economies permanently lowers the ceiling on your potential revenue.
So when you synthesize all of this, the explosive Q1 cash flow, the brilliant structural moat of the OpenAI warrant, the shift toward agentic AI, but you balance it against 160 days of inventory and hard caps on Chinese revenue. How is Wall Street actually modeling this?
Well, we have a fascinating split in analyst sentiment right now based on which timeline they are prioritizing.
Right, because D.A. Davidson just aggressively upgraded AMD to a $375 price target, and Stiefel raised theirs to $320.
Those firms are focusing heavily on the multi-gigawatt hyperscaler commitments. They believe the agentic AI shift and the resulting dual demand for GPUs and CPUs will easily burn through that existing inventory over the next few quarters.
But then you have Morgan Stanley, who trimmed their target down to $255. They aren't looking at the gigawatts, they're looking at the 160-day DIO and the geopolitical caps.
Exactly. They are betting that hyperscaler demand might experience a cooling off period before AMD can move those chips off the balance sheet.
If you aggregate the broader Wall Street consensus, it settles right in the 271 to 291 wordle range. So the general verdict is a moderate buy to a strong buy.
Yeah, because the core business execution and the strategic design of deals like the ZT Systems spinoff are undeniably strong.
But trading at a 240% premium year over year means that perfection is essentially priced into the stock. Any slight delay in data center deployment leaves the stock highly vulnerable to a sharp correction.
They are walking a tightrope forged by their own success.
Well said. Let's distill the core takeaway here for you. AMD isn't just riding the coattails of the AI boom. They are actively reshaping the mechanics of it.
By securing gigawatt-level hyperscaler partnerships and locking in key players like OpenAI with highly creative equity warrants, they've built an incredibly resilient financial engine.
And their true structural advantage lies in the resurgence of the CPU. By capturing both the GPU reasoning market and the CPU execution market, they are uniquely positioned to provide the complete hardware foundation for the next phase of agentic AI.
The realization driving their strategy is that winning the AI infrastructure war requires more than just designing the smartest digital architect. You have to supply the general contractors on the ground that actually execute the tasks.
Which brings us to a final, provocative thought to leave you with. Over the last 3 years, we have defined an AI company primarily by the sophistication of its neural networks, the software that thinks and reasons.
Unlike the flashy stuff.
Exactly. But as artificial intelligence shifts from just thinking in the abstract on a GPU to actually doing and interacting with the real world using digital tools via the CPU, how will this change our fundamental definition of value 5 years from now?
That is the big question.
Will the unglamorous traditional compute hardware that actually executes the code end up being just as valuable, if not more so, than the flashy neural networks issuing the commands? It's a fascinating paradigm shift to watch unfold. Thank you for joining us on this deep dive. Stay curious and keep exploring.